And we are officially live. Good morning, good morning, good morning. Welcome to Money Matters only on onedealaway.com, where we broadcast every single morning at 7 a.m. Eastern Daylight Time. My name is Nev, and in today's episode, we're going to be talking about all kinds of cool things, including what's happening with the gold and silver, what's going on with the insider sales. Are the people on the inside buying or selling? And what should that be informing us to do potentially? I don't know. So we're going to be covering all kinds of things of like what's going on and what are some of the company leaders, company insiders, as they're known, doing when it comes to their own stock. And so, one of the things to always think and consider is what's happening. They typically tend to know things a little bit more than we do. Well, at least when it comes to their companies, they should, and most of them do. And so when they go in and start buying their own stock, what is that telling us? When they go and start selling their stock, what is that telling us? And I think that that is going to be very telling. Of course, you've likely seen that the gold and silver has actually dumped, but what is going on, and is that normal and typical, and how should you plan and prepare for the future? So as you can see, we have all kinds of stuff, all kinds of news happening, and if you're here to learn how to make and protect your wealth, well, you are in the right channel, and I want to welcome everybody watching this live. Feel free to sign in onto the chat, say hello, and save your questions for a Q&A, which happens every single time at the end of the show. For those of you watching on YouTube, hello, hello, hello. Do me a favor, smash that like button right now. Do subscribe and hit the bell so you get notified every single day we go live. On this show, as always, we cover major macro moves of what's going on, how to protect our money. We talk about investing in precious metals, investing in real estate, in crypto, and of course, the overall market. So there you go. If you are curious about those topics, Money Matters is the channel for you. Let's do this. And good morning, good morning. Happy Wednesday to you. It is Wednesday, and we do have some excellent news. As I have shared with you in the intro, it's very important to pay attention to what the insiders are doing. And that information typically is publicly available. You just kind of have to search for it a little bit, but you can definitely find it. And that is exactly what I did. I went out there to find out what exactly are the insiders doing. And here, let me make this a bit smaller, but here is the chart that I was able to find. So it's a website basically called Open Insider, and you can go in and click on whatever you want. You can actually look for specific stocks, and so what I did is I just put in purchase and sales the last 2 months. I didn't do anything else, and just kind of left it at like 100 results just to see an overall picture of what's going on. And you can see it's basically an Excel spreadsheet. I don't know how else to call it. It's just online. You don't have to download it. But here are the things that we should consider, right? Right down here, it's kind of small, I know, but if I make it bigger, let me see if I can actually do it. Yeah, that's fine. For our purposes, that's fine. We're not going to read all of the different components of it, so I think that that's fine. So you will see that the pinkish is sale, the yellowish is sale, the kind of purplish is the tax related component, and a greenish is the purchase. So I mean, it looks like an Easter basket over here, but the piece that I think is interesting for us to pay attention to and look at is that this is all sales that have basically happened, even though I said 2 months because I limited it to 100 responses. We only got 100 responses, and so this is basically only the last, like, I don't know, 24 hours or so. So it's basically yesterday's trading that we were able to see. And one thing that you will notice, you want to focus on this right here where my mouse is. You will see that it's sale, 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 sale. There's one purchase, 2, 3, 4 purchases. Everything else is sale, right? 5, 6, 7, 8 purchases, 9 purchases, 10, 11, 12, 13, 14, 15, 16 purchases out of 100 transactions. That basically lets you know that predominantly insiders are selling. And my question is, why? Do they know something that you and I don't? Very likely so. And that brings me, what actually drove me to the research of what the insiders are doing when it comes to their stock holdings, had to do with this particular article right here. Bezos dumps over $3 billion worth of Amazon shares. And, should we be worried? That's what the question is. And that actually was, something that drove me to start looking into what's going on and what the insiders are doing, and kind of how to sort of think through what might be happening with the market. Because, future is unknown to everybody. But one thing we do know is, remember in March when we had a giant collapse thingy, right? When we dropped, 30 some, 40%, whatever it was. My memory, I just remember that we dropped quite a bit. My memory doesn't hold exactly to that number. But at that time, in February, when the market was at its hottest, Bezos actually sold quite a bit of its stock right around that 2000 level. Then we kind of dropped down, and now he's selling at around 3,000 some level, about 3,000 something to 3,100 something. You'll see it in the article in just a moment. But what the interesting and curious piece for me is the fact that he was selling yet again. And my question is, are we topping again? Is this another February, and now we're going to see a giant dump come, I don't know, late August or maybe mid-September? And I think more likely scenario could be early to mid-September. Again, I don't know for a fact, right? My crystal ball broke years ago. None of the stuff that I share here with you is financial advice whatsoever, and you should do your own research. And if you need a financial advisor, find a competent one that you can trust, that is hopefully making money doing what they're telling you to do and not just selling you into products. But anyways, that's just a piece because, I looked at the stuff, and I remember in February, a bunch of the insiders sold their stock. Bezos sold his stock. A lot of Congress people and senators and that kind of stuff sold their stock. I tried to find that stuff. I couldn't necessarily locate it. So, but I'm not going to give up because I was running out of time this morning, to be honest with you and transparent, to look at it deeply. But you should. And if you know something, let me know. And hey, you can let me know in the chat or in the comment section as well, because I do read that stuff. And of course, in the chat, I also answer questions. So we got to chatting, we end up hanging out for a little bit. So anyways, let's continue with the news. So Jeff Bezos shed 1 million shares worth over $3 billion of his booming Amazon stock. He sold his stock at between $3,102 per share and more at $31.83. Now, what I did is I pulled up the trading view, and basically that lets me know that he sold somewhere in this part, right? Just because of where the prices are, right? So here we go. We are here at the 31 level, right? So it probably was, early to mid-July up until, I would say early August, because this news report was written on August 10th. So it's only a couple days old, meaning that this had to have happened a little while ago, because how else are they going to report it? They have to get the stuff. So that's kind of what I'm saying. So that's what my guess is, that it has happened over the last 30-ish days, right? Roughly speaking, a little bit less probably, but roughly speaking, that's kind of where I'm thinking has happened. And of course, if you go to this website right here where we're just talking about stuff, I'm sure that we could actually put in Amazon, right? Let me see. Maybe we can see this. I haven't looked at it. And yeah, there you go, Bezos. So here we go. We actually have the dates. So 8.5. There you go. It happened, what, 5 days ago, 7 days ago. So yeah. So he sold a bunch of it. And of course, we have another person from Amazon that sold. There was Indira Nui, a director level, basically bought in early July, and but Bezos and CEO at Amazon Web Services and somebody else actually sold their stock. So there you go. We actually have a date. So now we actually have a date. We don't have to guesstimate anymore. Let's continue reading. At the end of July, Amazon broke all expectations by posting $88.9 billion in revenue for the second quarter as a result of the everybody going online and moving on. I believe the U.S. financial market is in an escapable bubble. The Federal Reserve plan is to support the financial market wasn't meant to be long term, and yet it is. And there are other reasons why we might be in a bubble that has to come with a completely different author and different article whatsoever. Quantitative easing was designed specifically to maintain investor confidence during what they believed would be a small disruption in economy. The CARES enhanced employment benefit were bolstering retail sales and creating signs of hope in the economy, all of which are dwindling every single day as signs of hope in the economy. All of which are dwindling every day as new stimulus isn't reached. Consumer spending is nearly 70% of the U.S. economy. Hold on just a moment. Let me turn on the fan. It's kind of getting hot here under the lights. All right, much better. Thank you very much for that. I appreciate it. So one thing for you to kind of pay attention to is that to keep in mind that the U.S. economy is the consumer economy, and so with so many individuals losing their job, we were depending to continue that consumer economy through the CARES Act, right? So we were able to actually get quite a bit of funds, if you think about it, from the government, and so folks could actually go in and they could still buy stuff and they could still do things, and so we were seeing things still moving. As things were reopening, there was a hope that things are going to continue, but people were not. The economy doesn't move that fast. I mean, I say real estate moves fast. Real estate moves slow, not fast. Real estate moves slow. Economy moves even slower. And so things are, the jobs are not, something that is just boom created out of thin air. It takes a while for that to do it, and a business actually has to have consumers kind of coming in order to start creating the jobs. But in order to start getting the consumers in, those people have to have jobs. So you can see sort of like a vicious circle, chicken and the egg. Which one came on first, right? Is it a job or a buyer? And it has to be both at the same time. So it is important to know that the way stocks are valued are typically based on two things: the value of a hard asset held by the company and their expected future earnings. All right, a bit of a disturbing picture coming on. So in 2, 1, go. All right, we made that fast. I don't know why they did that. That is very disturbing photo. It creeps me out every time I see it. But maybe that's why. That's what I call good marketing, right? Nearly half the money in the U.S. stock market is being put in by passive investors, and we're going to talk about that in a moment. Investors who are putting money in entire sectors or indexes without looking at one particular stock. The valuations of these stocks could be totally wrong, and when it's revealed, anyone holding the securities backed by the company whose assets, including future earnings, are not properly valued and are bound to get, you can read it, I'm not gonna say the word, I just even though I've said it before, once people take notice and dump their stock. So I'm gonna say get hurt, get financially hurt. So Amazon is the quintessential example of this capitalism, growing exponentially and buying out competitors left, right, and sideways, as I like to say. And one of the things that you also may know that I've also already mentioned once is that they have Amazon has created this vulture capitalism, or venture capitalism endeavor where you as an inventor can go in, they get you funded. However, they're also taking your idea, stealing it, and rolling it on the market before you ever can, utilizing what they got. So be careful if you decide you want to do that, because we've seen one too many reports. And again, fact check me, search it for yourself, but that is what I was able to find online. So you might want to just pay attention and, of course, do your research on your own. Don't take my word for it. Um, of course, Bezos and Amazon widely refuse to comment on their sales. Last year, he sold 2.8 billion in shares, and earlier this year, he sold 4 billion, now totaling around 7 billion this year, right? So in February, he sold about 4 billion. Now he sold about 3 billion. So he's slowing down in the amount of the sales, but nonetheless, as at least when the prices come, or the amount of money that he's collecting, but the amount of shares, is obviously less, because you can get, less right now than it was in the past. And he's saying that all of that money is going for Blue Origin and stuff. But my question is, like, what exactly are we doing? Does he know something that the rest of us don't? Because it's just very conspicuous that all of these sales are coming right now when the market is kind of appearing to be toppish. Not much in stimulus is happening. Everybody in the government is fighting more for who's going to win in November, as opposed to trying to solve the real problem that all of us are dealing with financially, and that folks are being hurt. And so not much of a resolution is coming in. Everybody's focusing on what's going to happen in November. And so is the market poised to crash? And potentially so. So we'll see how that is going to work out. I don't know. Jerome Powell said that there is an extraordinary amount of uncertainty right now, and I agree. It could be the case that people like Mr. Bezos are seeing writing on the wall before the general public. And as I have mentioned, and as we have seen just moments ago, is that he is not the only one selling. We have seen many people that are doing the exact same thing. And if we are to remove the maximum results, let me see what happens then, because I think hold on just a moment. I think I've put in, and this is just let's put it in the last 2 weeks. Sorry, you can't see this. Hold on. And here we go, just the last 2 weeks, and a lot of yellow and pink and red, and I think we've topped in as well. So last day, I don't know, because it's not letting me do more than 100. Oh, it is. Okay, let's see. Can we do the last 1 week? Yeah, let's do 2 pages. I don't know. What do we get? Oh, no, don't translate. It wants to translate a page. I don't need translation. We all can see what's going on. There's some buying for sure. But it looks like a lot of red, So anyways, this should be an interesting one for you to kind of take a look into and see, who is buying, who is selling, what is going on inside the market. And as you can see, we're getting definitely some purchases that are happening. And somebody has said, can we look at what's going on? All right, so here we go. One of the pieces that I did want to share with you is that we were talking in a moment about the fact that you get all of these passive investors, and potentially could get harmed, and we're not getting as good of evaluations. And interestingly enough, I don't do this on purpose. It just kind of happens that way, that almost like things just kind of align in an episode. When we talk about one thing, with other things kind of pop in. And here is what popped in right here. Now there are less than 3,000 US listed companies and over 7,000 global ETFs. That is huge. ETFs, exchange traded funds, used to be touted as a great way to gain exposure to the stock market. But now ETFs are the stock market because there's more of those than there are stocks on their own. So the number has peaked. The number of the US stocks has actually peaked in the 1990s, where we had just a little bit over 7,000. Then we dropped to about 3,600 or so. And then we received news yesterday on CNBC that there's less than 3,000 public listings now on the US stock exchanges, and there are over 7,000 ETFs globally. And this is sort of how this has happened over the last years. You can see that it has been an exponential growth happening inside the ETFs. And we've started with just a little bit down here, right? And now we're actually getting, let me see if I do this, does it get better for you or does it get worse? It's irrelevant. Maybe that actually worked a little bit better. Yeah. Okay, good. Glad to hear it, that it actually worked slightly better for you. So let me see if I can make this just a teeny bit better. Yes, excellent. Thank you for letting me know. I appreciate it. Okay. So anyways, as you can see that it was quite low, and then it just started to balloon, and this is the 2019, and now the report is that there is over 7,000. So we were just short of 7,000 a year ago, plus minus, right? So now the liquidity crisis that could easily be created from passive investing in ETFs as their popularity grows. So additionally, the use of ETFs as trading vehicles instead could wind up distorting the value price of the underlying stock held within them. So we've already talked about that, because you bundle stuff together. When a bunch of people are buying the ETFs, the ETF is actually the robo trading. The algorithms are buying the shares of stocks, or the fractions of the shares of stocks, and so those stocks actually go up, but people might not necessarily be buying the particular shares of the stock. They're just buying an ETF that has components within it, the way that it's kind of structured. It's sort of like instead of going to the grocery store and buying like milk and eggs and sugar and flour and that kind of stuff, you end up going out and you buy a cake. And so now, because everybody's buying a cake, which is almost like an ETF of all the ingredients in it, right? The milk, the sugar, the flour, the all these different things, the egg. So everybody's buying cakes, and the prices of all of these underlying things, the ingredients, starts going up. But we don't know if that's going up because truly there's a value, a need, and desire, or everybody's buying a cake. And then what ends up happening is that when some of the cakes go bad and people start dumping them, you potentially end up hurt. Cake might not be a greatest example when it comes to dumping, but I think it does good job, good analogy to explain kind of ETF component. I don't know, maybe I'm wrong. Let me know what you think. So here it is, a really interesting chart where you can see the passive equity fund asset versus the active. And the active basically is typically it's either you are buying actively and selling actively stocks, or you have a human being that is actively trading on your behalf, like a broker, right? And then you have passive, which is sort of that ETF component where you have an algorithm, you just put in certain parameters and it kind of buys and sells on its own to kind of keep whatever the modality is. I mean, if it's if it's a S&P 500, right? SPY code for that ETF. If that's what it is, then as the S&P 500 gains companies or loses companies, the SPY buys and sells those shares of the companies, right? So that's kind of the passive component, and so that's what they're talking about, passive investors, because you just put money in it and then the algorithm kind of trades on your behalf right there. Back in September of 2019, Michael Burry had claimed that the passive investment, such as index funds and exchange traded funds, are inflating stocks and bond prices in a similar way that collateralized debt obligations did for subprime mortgage more than 10 years ago. So if you recall, in the in the 2005 on so fiasco, it actually started a little bit before then. So let me kind of explain just a little bit of the historic component there. So what ended up happening is that there was a very easy monetary policy where you could get all of these easy money, easy rates, cheap money, all of that stuff, similar to what we're seeing right now on steroids, right? And there was a lot of lax rules about lending and borrowing, and homes are good investment, they never go down in price, everything goes up, houses always go up, they never crash. All of that story was basically going in, allowing people to start going in and start buying into this stuff. As the momentum started to pick up, the prices started to pick up, FOMO started to set in, more people started to jump in. More people then started to realize, hey, wait a minute, I don't have to work, I don't have to do much of anything. All I can do is just buy a house, sell a house, buy a house, sell a house, put it under the contract, wait for 3 weeks, it goes up 20%, sell it, and that's how I make my money. So people started trading basically homes like they were baseball cards. I mean, they literally were trading them back and forth. And next thing you know, these collateralized debt obligations were then packaged, sold as super safe, even though they weren't. It was sort of mixed bag of everything, a little bit of good, a little bit of bad, all over the place. But next thing you know is things have imploded. The CDOs actually ended up imploding as well, and that's kind of what started bringing down the whole economy. And then Lehman ended up going out of business, and then money started being printed and falling out of helicopters, and right, the history. So what he's basically saying right here, Michael Burry, and I don't know who that is, I should have done research, but I didn't, is basically saying that, wait a minute, the passive index investing is inflating the stocks and bonds in a similar way of what actually happened with the CDOs. CDOs were very, very toxic, and we just had an episode, a couple weeks ago, that we talked about the CLOs and how problematic they are right now, which is similar to CDOs, except it just goes for the debts that businesses are taking as opposed to individuals with the mortgage. So it's the business loans that are in a similar trouble that the collateralized debt obligation CDOs were. But now he's saying that, wait a minute, we are having easy money. That money has to go somewhere. It's been happening very, very easy right now. People are jumping in. We're starting to create all kinds of bubbles incredibly fast, and we don't know the valuations because everything is kind of mumble jumbled into one thing and is seen as super safe. So more people are coming in as the prices are going up. FOMO is kicking in, so you can kind of see the very similar thing kind of transforming. Like most bubbles, the longer it goes on, the worse the crash will be, and I agree. This is very much like the bubble in synthetic asset-backed CDOs before the great financial crisis, except I would argue that it's actually worse right now than it was then, because economy then was in a much better shape. I'm not saying it was awesome, but it was definitely much better shape than we are right now. And we at that moment had an opportunity and ability to lower the rates. We don't have that opportunity or ability to do that right now because they're already low. They can't go any lower than they have already gone, right? And so they are as low as it gets. So something for you to keep in mind. But where has the money been going? Well, money has been going into stocks, some into bonds, but not so much. We've had some money that went into it, a little bit into the cash and currencies. A lot has gone into the gold. And of course, as you know, the real estate market has definitely been hot since I would say like Mayish, June-ish, July. The jury's still out on it, right? We should be getting stuff, and as always, we do the report on Thursdays about real estate. So I should have some additional information for you what's happening in the world of real estate tomorrow. If you're interested, make sure you join me live, or you can just watch the replay on the YouTube channel. But in order to do that, you have to actually subscribe to be able to notified when it goes live. So, but where is the market going? And so an interesting story kind of came out saying, well, here is where the money is going, right? So you don't have to take my word for it. Let's go to another important piece coming out of Reuters. So here we go. Here's what's been happening. Well, here is kind of where the money is going and what's going on. So, this is the economy around the globe in, 3 minutes. So here we go. Britain has seen its worst economic quarter on record. I want to say they dropped over 20%. Check it, please. Their GDP has, just been decimated, just like Germany and US and everybody around the world. Gold swung almost 4% after its biggest fall in 7 years. German bond yields hit 2-week highs amid a deluge of global debt reissuance. Turkey's volatile lira took another 1.5% pounding. We talked about it, and it's getting even worse. New Zealand dollar dropped 0.4%, and that's nothing comparing to everybody else and what's going on around the world. New Zealand, you're doing excellently. Mixed sentiment had dragged on Asian stocks, especially because of the U.S.-China, thing happening. But Beijing has also reported weaker than expected loan growth. What happens when next probably pause, time out. What happens next probably depends on what happens in U.S. equity markets. On Tuesday, the S&P 500 snapped a 7-day winning streak after it was coming close to its high, right? And we'll see where it's going. The futures are saying it's going to go up, but again, not a financial advice and not a guarantee. Sometimes the future market says one thing, but the actual thing is something completely different. The 10-year U.S. Treasuries had climbed a couple of basis points to 0.67% from the 0.5-ish or so in Europe to stay at a 1-month high. 10-year yield went up 6.6 basis points, and 30-year went up 7.5 basis points. Yields saw their biggest increases over a month on Tuesday. The gap between the U.S. 2-year and the 10-year Treasury yield is a metric closely watched for signs of a slowdown, and the 2s and 10s curve steepened 4.6 basis points, which basically tells us we might be going in a good direction in the market, but who the heck knows? Russia's President Vladimir Putin said on Tuesday his country was the first to grant regulatory approval for a COVID-19 vaccine after less than 2 months of human testing. I don't know how I feel about that. That was my biggest fear, y'all. I don't know how you feel about it. Let me know in the comments, in the chat. But I am petrified. That was my biggest fear, is that they're going to slap something together. They're going to test it on a mouse, a rat, and a rabbit. And then after 3 animals, they're going to put it on 5 humans and say, we got it. Come on in. Let's do this. And that's kind of what seems to be happening. So I don't know how I feel about that. It's really, really weird. And I don't know. I think I want to wait for, give me at least 18 months worth of trials. I know that that's too long and stuff potentially, but I don't know what's in that darn thing or what the side effects are, or, am I going to grow a third eye or a tail at the end of the whole thing? Am I going to glow in dark? If it gave me superpowers to see the future or fly, maybe at that point I'll do it. But if it's something weird, you won't be able to hear in 6 months, or, like I said, you'll grow a third leg or a tail, I don't know that I want it. So I don't know. Let me know how you feel about the whole thing. I think it's a bit too soon. Sorry, Mr. Putin. I think it's too aggressive. Oil prices edged up. The most dramatic move took place in precious metals. Gold swung from being down 2% to being up, excuse me, 1.7% at 1,935 per ounce. Silver was even more wild, rising nearly 4% in Europe after 15% plunge on Tuesday. So there you go. Around the world news. Wasn't that lovely? That is fantastic, right? But I do have a bit more for you. And first, I want you to take a look at this chart right here. You can see that this is a 1-year gold London fix daily with 14 and 200-day moving averages. And you will see that we've hit over $2,000 in a quite a bit of a active move, and that we retraced just like we kind of expected that it's going to happen, because it has to. No, nothing can go up at nauseum. It actually has to go up, then it kind of comes down, and you've seen that we've been seeing a bit of a correction right here. Now what they're saying is that in Europe it has gone up some, so we might see a little bit of an up movement, but that is quite normal. And then here is a silver, same thing. I think you can see it, and but you see the silver has reacted a little bit differently. It has gone up, kind of downish, and then back up, and then sort of sidewayish, as opposed to gold that actually has done this and then has retraced back down. Now, I actually do have another sort of news report right over here as to what's happening inside the precious metals. Small reversals are just not gold style after a major advance. Typically somewhere between 15 and 20% drop is more common, and that's something for us to keep in mind. Now here we go. We've seen that we've gone up over here to over $2,000, and now we've kind of dropped back and retraced to, what is this, February levels? Yeah, no, I can't see this. Why is this so small? I don't know. It's showing that we're retracing down to February levels, but I wish that this was easier to see. My apologies for this. Oh, this is the December futures. Got it. Sorry. December futures. This is September futures for silver. So you will see silver has actually dropped, and but the gold and silver ratio is actually soaring. So we've actually hit the low 70s, high 60s only a few days ago, and now we're actually going back up to about 80 after finding support at 2017 lows, right? We're actually going back up. Nothing goes up every single day, right? And that is true for gold, that is true for silver, that is true for stocks, bonds, real estate, cryptocurrencies, Bitcoin, which, by the way, when the Reuters were talking about like all of these crazy trades and stuff, nobody was talking about crypto. And crypto has been performing all kinds of insanely as well. And we've seen some very major shifts, but that is crypto, right? Where it would go up, 17x in a month, and then it kind of takes like 70% dump in a day. And so, we see that stuff happen in crypto, but for some reason traditional media just doesn't always report it. They do when they have like a specialty channel just for crypto, but they don't do it in an overall piece. But I think that will change in the future. Anyways, if you're interested about crypto, typically we do crypto over the weekends, so that's typically when you can tune in for the crypto news if that's something that you're interested in. But we do talk about it when we have some big news that kind of come up. So anyways, let's go continue with the gold piece. Fundamentals for gold and silver are better than ever. Printing trillions of dollars. Fed is saying they don't even think about raising the rates, and central banks are set to make commitments to ramp up inflation. All of it is bullish for precious metals. All of it is bullish for crypto as well. And a lot of the things are very bullish for real estate, but real estate does have an interesting and different kind of risk, unlike gold and gold, silver, and cryptos. At zero interest rate, gold becomes a very, very, very attractive asset class, as does crypto. Just personal thing. I'm going to keep on adding it here. Central banks added another net 18.1 tons of gold to their reserves in June, and World Gold Council is also finding that 20% of central banks globally plan to expand their gold holdings in 2020. This year's surge in precious metals, as Peter Schiff warns, is not a happy occasion because it really portends some big problems on the horizon. Gold is basically letting you know that the hardship is on the way. And I think most people already know that by now. So there you go. This is the news of what's going on in the world of money and investing and real estate and all kinds of other things for you to think about and consider. One of the things that you might want to know and notice is that, it's not a perfect case scenario of what we're talking about here, but there's always a way for us to be able to make money. One of those things is watching the insiders, and they appear to be selling. So perhaps that is telling us of maybe we should consider taking a little bit of money off the table, especially if we have made quite a bit of profit. The other piece that we should consider in doing is to consider, does it make sense for us to potentially buy a bit more gold right now that is consolidating and kind of hodling onto it? Should we potentially sell some, maybe if we were trading it, should we have sold some when it makes money, and a lot of the swing traders will basically tell you that, yeah, you follow the trade. You buy when there's a good opportunity to buy. You let it ride on up. When you have the indicators let you know that you got to sell, you sell, you take the profit, you let it come back down, you buy again, and you continue trading on the swing on up. The piece that you should consider if you decide to do that are taxes and the reporting of it, because you're going to be dealing with the short-term taxes, which means that it's not capital gains, it's actually going to be your regular income day taxes. So if you are in a tax bracket of 40%, your profits are going to be taxed at a 40%, because anything held in less than a year is going to be taxed that way. So there you go. Hopefully this was helpful. Join me tomorrow live only on onedealaway.com. Do me a huge favor. Smash that like button if you have liked the show and enjoy it. Let me know in the comment section of what your thoughts are about the whole thing and where we're heading, what the future is if you have a crystal ball, because I don't. And I will see you tomorrow for a conversation on real estate. Until then, stay forever money blessed, and do remember, you are only one deal away.